Hello everybody, I'm going to do a video on another longing setup. This can actually be used long or short, but we will do what is called an ORB, opening range breakout. And I'll show you what to look for, and this is definitely a very safe, easy way to get into a stock, either to long a stock or short a stock, but like I said, we're just going to do the long setup. So the first example here, I have REN. Now it doesn't matter the ticker, it doesn't matter the price, all that matters is the pattern, okay? So the bell opens, it should be on your radar because it gapped up, right? So it gapped up. Now you're watching. So you don't want to play the market open, okay? You want to give it time to pick a direction, and this is a way to get into a stock after it has definitively picked a direction, okay? So what you do is, as soon as this your first candle kind of settles on the 1 minute chart, you need the 1 minute chart to play opening range breakouts and breakdowns, in my opinion. So you want to mark that. Now this one, REN, is a little different of an example as the other ones, okay? So you always want to give it at least 2 or 3 candles. So the first one's been marked because we haven't seen these ones develop yet, right? Because it's first thing, bell just goes. So you mark top and you mark bottom. So the next candle pops up, and even though it breaks that line, you still don't get in. It's fine. Let it develop. If it takes off without you, there's other ways to get in. Do not get FOMO, okay? Don't be chasing. And even just getting in right there, that's considered chasing as far as I'm concerned. It hasn't developed. It has not given you a proper setup. So now the second candle goes. So you can mark it as well. You don't need to, right? But you can mark it, and you could even get rid of that one if you wanted. So now the second one goes. Okay, now after this one develops, now we're watching. We're waiting for an entry. We want to enter this trade, okay? If this was a stock that you were looking at and watching for a potential trade, whether there's news out on it, who knows? This is just an example. So it's been marked. So it opens up and it sells off a little bit. Now you can tell by the volume down here, that's just a little bit of profit taking because there's probably someone from overnight and they've realized it's gapped up, so they're taking some profits. Not a big deal, no reason to get freaked out. You always look at the volume for that, especially first thing in the morning on red candles. You want to make sure they're nice and low, because if you get a big red volume bar, it's most likely it's selling off. It's not just profit taking. So the second one goes, now the third one goes, now the fourth one goes, and then finally it breaks. Now you should have already had an order ready, okay? Um, like I've said before, up in here, you already want an order ready to go. So let's show you that here. Okay, so you're looking for the break of 41.35. Okay, so now you can put it in a limit order at 41.36. But if it really takes off on you, you might miss it, right? So you want to give it a couple cents just in case. So you just have this order ready. After this candle, now the order's ready, okay? So now you can hit buy the second it breaks this line, but that's why I like using stop limit orders, right? Because it'll get me in automatically, and I have other videos kind of detailing that. So once it breaks, now you're in. Now you can enjoy the ride. Your risk is if it breaks this line, or if you want a wider risk, you can have it if it breaks this. But it's kind of that breakout or bailout type of mentality. That's a good mentality to have because it'll definitely protect your account, but you could also miss out on trades. I like to set a nice, kind of a wider stop. I'm always willing to risk a little bit of money to make money, but you can see here you'd have to share size accordingly because, you know, that's 30 cents right there, right? So you'd kind of have to be a little wary of that. But that's that, and then it kind of does its thing the rest of the day, right? And no reason to get stopped out. No reason to pull off all of your shares, okay? Because it hasn't broken VWAP or anything like that. You could actually add into these. What you do is on the first push, sell a couple shares. Just pay yourself, right? So on the first pullback, as soon as it holds VWAP, you can add shares. Add a few more shares. It doesn't have to be a lot, right? So you add some shares, and then it pretty much goes straight up. No reason to sell out. Sell at least half in here, at least 50% of the position somewhere in here, and then you can always re-add, right? So it pulls back, it didn't break VWAP, and then it bounces again. You could add some shares, right? You can kind of keep adding to a winning position. So that's one example. I'll give you another example here. LL, again, it doesn't matter the price, and don't let price of stocks scare you out. Even if you have a small account, there's such wide range on these. I mean, you know, at its bottom to even this range here, I mean that's 2 points. If you took 100 shares, there you go, man. Right? It's $200. I'm saying if you caught 100% of the move, that doesn't happen, but you know what I mean. I think you know what I'm getting at. So, okay, here's another opening range breakout. So you do the same. This would be, and this is a well-played ticker as well, even though it's Lumber Liquidators, but it's a fairly well-played ticker. So your first candle here, bell opens, market out, right? You want to give it a few. On this, you might have got faked out a little bit because it sold off, and then you see this volume come in and squeeze up. So this is why I want to give you these types of examples, because nothing's perfect, right? But you can just add a few shares. So let's say you got faked out and you were in, right? And then it sells off. Well, that's quite a few cents right there. I mean, that's 36 cents. So either you would get stopped out. If you stop out, if you have a tight stop, that's fine. Just watch it again, okay? So now it kind of sells. It just pulls back a little bit. And like I said, I mean, as long as it's smaller than this, it's just some profit taking. It's no big deal. This is a fair size volume bar, but it's fine. It's not bigger than this one, right? As long as it doesn't tower over this. So it breaks this, and then you could get in again, or if you're still holding your cherry, right, you're good to go. And this could be your confirmation candle if you wanted to kind of play it safe, but you'll end up missing some moves like that. This confirmation candle, right? And then you just kind of enjoy the ride, right? And that did pretty good. See, so again, it didn't break VWAP, so you take off half into the first big move because you got a bunch of green candles, and then you see this candle here especially starts going parabolic, meaning the price action is speeding up in relation to former price action. And even here it went a little bit parabolic, but up here definitely, because you know it's a little bit overextended. You know it's going to pull back, right? So that's fine. It pulls back, doesn't break VWAP, and continues a little higher. So we'll take a look here, you know, at what you could have got out of that move. I'm saying from the top. See, $2. Do not be afraid of little higher price stocks, okay, guys? The range is there. Take 100 shares, you make a couple $100, you're done, and you can keep adding and taking out, and you know, like you can play around. You can play one ticker all day long and be profitable. Okay, I've got one more example for you guys. HK, little more in, I guess, our price range. So this is a good one here. We'll mark it out. they're all opening range breakouts. So your first candle comes up, you can mark that out, right? You want to give it at least 3 or 4 candles, right? So with these, I mean, give them time. Give them time to prove themselves. On this one, you know, it was such a big candle that I don't think I would have hit the buy button because I mean, you can tell with the volume, it's not really squeezing. It's all about price action, guys, and that'll come in time. You'll get faked out until you really are able to read price action. So you take a look at that, and uh, you can see that it's on this one candle, it's fairly overextended. So I would wait, and then it gaps up and then kind of sells off, and now it's starting to bounce. Now that's your money ticket. Now you should know that this is good. This is a strong stock. It's held VWAP. We're all good to go. So even if you wanted to get in at the top of this, that's fine, right? It all would have been good. You wouldn't have got stopped out. You can tell the range on this is fairly low. So even here, like if you got faked out, let's say here, and then came up and then came back down, you're only at 7 cents. You should be risking at least 10 cents on a trade. You know, 10 to make 20, at least a 2 to 1, right? So if you got in roughly there, like I said, there's not much range on it, but you got 30 cents just in this first move. So I mean, there you go, right? And it went higher. You can hold. There's no reason to sell your full position. You can keep your core. It didn't break VWAP. I mean, even if it pulls back, who cares? Look how strong this is. I mean, that's awesome, right? So that is the opening range breakout setup. It's one I play all the time. It's one you guys should all be playing all the time. There's only a few real setups that I really go to and I play on a daily basis because that's what traders are watching. You want to play the setups that millions of traders, thousands of traders are watching themselves. But okay, guys, I'll let you go. Like, share, and subscribe. If you got any questions, leave a comment in the box below. Thank you.